Welcome to everyone. In this week video you will learn how powerful and profitable are the cycles, and how to use them to trade the stock market and to increase your profits. This week video will cover the Dow Jones Industrial Average for the week of April 15, 2024. This video has been made on Thursday, April 11, 2024. Before we start, make sure you read carefully the disclaimer. This week we have an interesting situation about where to place the 20-week cycle. Let's see how to handle this situation and the different implication. Let's start by the 40-week cycle. The Dow Jones Industrial Average is still on his way to form his 40-week cycle peak. The confirmation of the 40-week cycle peak will come when the Dow Jones Industrial Average will cross the 20-week cycle trend line, also called VTL by Hurst. To have more details about the cycle trend line, I recommend to watch my last week update video. The second confirmation of the 40 weeks peak will be when the Dow Jones Industrial Average will cross below his 20-week cycle line, providing a potential downside target, certainly very close to his 40-week cycle line. To have the same nominal mode average length, which is 34 weeks, the 40-week cycle low is expected to form around end of June. But since the first 20 weeks run longer than expected, we can expect the 40-week cycle will run longer too, maybe until end of July, or the second 20-week cycle will be very short. Since it's the first 40-week cycle since the October 2023 major low, the peak is expected to form on the right part of the cycle. Hurst called it the right time translation. To know more about time translation, in the description below, I posted the link of a series of video about to understand how the cycles works. If the peak form on the left part, this will be the first sign of some bearishness start to come into the market. Let's see the 20-week cycle. On my last 2 weekly update, I debate where to place the 20-week cycle low. Let's see the two different possibilities. The first one is the 20-week cycle low occurred last week. The second option is the low is on March 11th. What is the difference in term of trading? Actually, there is absolute no difference, since the trading signals are given by the crossing above or below of the cycle lines, by the price. Let's see the implication of the two different options. The first option. For this option, the 20-week cycle is longer than expected. He is about 24 weeks long, which is not impossible, since the cycles are dynamic. In this case I will adjust the 20 weeks trend line to the new low, and we will keep an eye on, to see when the Dow Jones Industrial Average will cross below, confirming the 40 weeks peak is in formation. There is a high probability this option is the most likely to happen. The Dow Jones Industrial Average should find support on his cycle line. If the market cross below his cycle line, then the second scenario become the most valid. When we will know which option is the best? If in the next few weeks, the Dow Jones Industrial Average cross below his cycle line, then the second option could be the best to follow. For now, the one I will follow and the first one is the one which make more sense to me. If it's the first one, the 20-week cycle is 168 days long, which is little bit long. The Hurst nominal model is 136 days, is only 32 days longer or 23% longer, which is not uncommon in the market. For the purpose of the analyze, I will place the 20-week cycle low on the last week low. On the lower time frame, there is no implication on the trading. That's the beauty of trading the cycles. The trading signal is triggered when the median price cross either way the cycle lines. This helped to avoid the false signals. Let's go to the 80 days cycle. The last 80 days cycle lasts 83 days, 15 days longer than the 68 days average length for the 80 days cycle. If the second 80 days cycle is about the same length, this will give the April 10th, the date for the possible next 80 days cycle low. On the second option, from January 18th low to the March 11th, the 80 days cycle is 57 days, combined with the first one is exactly 140 days, 4 days longer than the nominal model. Placing the 80 days low on April 11th low will give the June 18th as the next potential low. Placing on the March 11th, the next 80 days low is expected on May 18th. The success rate is 100%. For the past 2 weeks, the Dow Jones Industrial Average trade on his cycle line. A sharp cross below his cycle lines, with confirmation in the next few days, will give more credit to the second option. Here are the cycle lines and their potential targets. What are the implications on the roadmap? For the purpose of the exercise, I will put the roadmap for both options, including the low from April low and the one for March 11th low. For the first option, we start a new 80-day cycle. This week the Dow Jones Industrial Average should cross above his 20-day cycle, providing an upside potential target, which should be met rapidly, forming the 20 cycles peak. Then the market will decline to find support on his 20-day cycle line around April 28th. After forming the low of the 20-day cycle, the Dow Jones Industrial Average should resume his up move, with a higher high than the previous high, the 20-day cycle high, to form the 40-day cycle peak. From there the market will cross below his cycle line, providing a downside target for the 40-day cycle low, around May 15th. Then the Dow Jones Industrial Average will cross back above his cycle line, giving a target for the 80-day cycle peak. After forming the 80-day cycle peak, around end of May, the market will cross below his cycle line, providing a potential downside target for the 80-day cycle low. Form a first low around beginning of June, before moving toward his cycle line, using it as resistance and resume his decline to form the 80 days low on June 17th. In the second option we are here, at the 40 days low, which originally was expected on April 14th. This week the market should rally and the Dow Jones Industrial Average should cross above his 20-day cycle line and providing an upside potential target for the 80 days peak, which is expected around the last week of April. During the first week of May we can expected the Dow Jones Industrial Average cross back below his cycle line, providing a downside target, forming a first low around the first week of May. Then rally toward his cycle line, use it as resistance and resume his decline to meet his 80 days target price around May 18th. In the case of the second option, with the low on March 11th, it looks there is some bearishness coming into the market. Here why? By drawing the 20-week cycle trend line from the last two 20-week cycle, we can see last week the Dow Jones Industrial Average crossed below his trend line, meaning technically the 40 weeks peak is in formation, and the 39,889 all-time high is probably the 40 weeks peak. If that's the case, the peak occurred on the left part of the cycle of the second 20-week cycle, which is usually bearish. In this option is valid, there is high probability the Dow Jones cross below his cycle line, providing a downside target. Here are the cycle lines for this week and their potential target, if the Dow Jones cross below it this week. Let's start with the 40-day cycle. In my last week update, I mentioned the Dow Jones Industrial Average has formed the 40-day cycle peak on March 28th. And the Dow Jones Industrial Average is on his way to form his 40 days low on April 14th. What's happened since? That's the beauty with trading the cycles, since the cycles are synchronized at their lows, no matter where you place the 20-week cycle low. The last week low is in any case a 40-day cycle low. So, if we trade the 40-day cycle or the 20 or even the 10-day cycles, last week those three cycles formed a low at the same time, this week, we start a new ones. Another beauty of cycles is the 40-day cycle may help us to find the best possible scenario. In fact, as I draw the cycle trend line from the last two 40-day cycle low, from the January 18th and the February 13th, we can see the market didn't really clearly crossed below before April 2nd. We know when the market crossed below his cycle trend line. This helped to identify the peak of the next longer time frame cycle. In this case we deal with the 40-day cycle, the next higher time frame is 80-day cycle. Then, the March 28th, 39,868 high is technically the 80-day cycle peak. If the March 28th is the 80-day cycle is the peak, the low have to be after the peak. For that reason, I prefer the first option, labeling the 20-week cycle low on last week low. There is a very high probability the April 11th low is the 20 weeks low. On April 9th, the Dow Jones Industrial Average crossed below his cycle line. The crossing occurred at 38,871, giving a potential target at 38,460 or 410 points or 1.06%. With a low at 38,304 on April 10th last week, the Dow Jones Industrial Average made his target. The success rate is 87%. The cycle trend is up for now. What's next? If the April 11th is the 40-day cycle low, the next low is expected on May 15th. We can expect the peak forming on the right side of the cycle, after the red dashed line, probably around May 8th or 9. In meantime, the Dow Jones Industrial Average will cross above his cycle line, providing a potential upside target. Here are the cycle lines for this week, and their potential targets if the crossing occur this week. The 20-day cycle. The last 20-day cycle low formed on March 26. The next one was expected on May 1st. Like mentioned on the roadmap, in the next few weeks, the Dow Jones Industrial Average should cross above his cycle line, providing an upside target. Then around April 28, the Dow Jones should find support on his cycle line. If the market crossed below his cycle line, this will be a sign of some bearishness start coming into the market. And we have to be ready to eventually switch to the second option. The first sign will be if the Dow Jones Industrial Average miss his upside target. Here are the cycle line and their potential targets if the market crosses cycle line this week. The last trading signal was on April 2nd. When the Dow Jones Industrial Average crossed below his cycle line at 39,365 for a potential downside target at 38,526. Or a potential profit of 681 points or 1.74%. On April 10th, the Dow Jones Industrial Average formed a low at 38,304, meeting his target. The success rate is 91%. The 10-day cycle. As expected during my last week update, the market rallied toward his cycle line, found resistance. Then on Tuesday the market continued his decline. On his way to form the next 10-day cycle, expected on April 11th. The next one is scheduled for April 19th. Here the cycle line and their potential target when the Dow Jones will cross above his cycle lines. The success rate is 100%. In conclusion, for now we still have little bit of some uncertainty about the degree of the correction, but for sure is at least a 40-day cycle. If is the 80-day cycle low and the 20-week cycle, the bull market is still intact. If the 20 weeks occurred on March 11th, then the bulls start to show some weakness. But for now this discussion is purely academic. Like we see early, for the trading point of view, is not very important to know where to label the 20-week cycle low. Since we know is at least a 40-day cycle, and the trade entry point are according to the cycle lines. For now there is no clear sign the bull market is over. It will be very risky to take position on the downside, since the bull are still very strong. Just as reminder, all my videos are for educational purpose only, and they are not in any case a trading advice. If there is a special market you are interested in, please do not hesitate to mention it in comment below. If you like this video, please click on the like button and subscribe, to make sure you don't miss any future important videos. This is the end of this week's video. Thank you for following me. Next week, I will publish another market update.